What's up everyone? In today's video we're going to talk about Alibaba, ticker symbol BABA. Before we get into the video, I know there's going to be people letting us know that investing in Alibaba or in BABA is merely investing in a VIE or variable interest entity that's listed in the Cayman Islands, and owning a share of BABA does not equal ownership in Alibaba as a company. Which is fair point, but that's how most of the Chinese companies are listed on the US stock exchanges. This is one of the risks associated with investing in Chinese companies, and it's part of the research. And well, most of the investors that are investing in Chinese companies probably already know about this, but if not, then it might be worth doing additional due diligence to know what everything about this means. Now, with this brief mention out of the way, we can get into the meat and potatoes of this video. And if you find any value in it, I will encourage you to please smash the like button for the YouTube algorithm. But let's waste no time, and here's the format. First, we're going to talk about why BABA is going down. Then we're going to talk about if this is going to be an opportunity for us as investors. And finally, I'm going to tell you what is my plan. Let's start with why Alibaba is going down. To have a bit of background, Jack Ma is the founder of Alibaba, but also the founder of Ant Group, which was formerly known as Ant Financial and Alipay. And Alipay was previously part of Alibaba, but it was split and it was made part of the Ant Group. And all those companies are affiliated companies. Now, back in October, Jack Ma and the Vice President of China were at a Shanghai forum speaking, and Jack Ma was speaking after the VP. During his speech, the VP said that the country needed to protect its financial systems from systemic risks, and it should be a priority for the country. And after the VP speech, then it was Jack Ma's turn to speak. And among the things that Jack Ma said are the following: we cannot regulate the future with yesterday's means. There are no systemic financial risks in China because there is no financial system in China. The risks are a lack of systems. If you ask me, based on Jack Ma's comments and the public information, his words were shot directly at the VP's speech and at the VP's comments regarding the financial system. And because of this, it also criticized the CCP party, or the Chinese Communist Party, and the Chinese system, which, if you look at it, it kind of starts that they are trying to punish him for doing this. After this, according to officials familiar with the matter, it looks like the CCP and the market regulators took action against Alibaba and the Ant Group, and they ordered to stop the Ant IPO, which was supposed to take place in November. And as you probably know by now, the Ant IPO didn't happen. Now, near Christmas, the Chinese regulators said that they are taking measures against Alibaba on reports that BABA is pressuring merchants that are selling on its platform to grant Alibaba exclusivity, meaning that they promise, or they are on a contractual obligation to not sell their goods on other platforms and only sell them on Alibaba. And if they don't comply with these measures, apparently, according to some information, the search engine would place them lower in search results, and also those merchants that are selling both on Alibaba and on other platforms would not be, or were not able to take part in high traffic campaigns, which ultimately hurts their business. On top of this, there's also some information that the Chinese regulators are also looking into predatory pricing behavior and taking advantage of the consumer's data to determine their spending habits and then take advantage of those habits. So as you can see, it looks like Jack Ma crossed the line a bit too much this time, and now the CCP is taking action against him. Now, let's see how this can benefit us. The antitrust investigation, or the start of the antitrust investigation, and the ANT IPO halt sent the Baba shares tumbling down. The shares are now trading at around $222, and they will probably drop even more with more and more information that's coming out about the investigation and about the measures that are going to be taken against the Ant Group. In any case, Alibaba is currently trading at a PE ratio of 24, a forward PE of 17, and a PEG ratio of 0.76, giving us an indication that it is trading at a discount, being undervalued. Heck, the current PE of the S&P 500 is over 37. So you're definitely paying less for Alibaba than you are paying for the S&P 500. Alibaba is a great company with a huge moat around it. The compounded growth rates for sales, earnings per share, for equity, and for operating cash flow for 3 years, 5 years, 7 years, and 10 years are ranging between 15% to 60+%. Those numbers can tell us if there is a moat around a company, and that's the only reason that I'm sharing this information with you. And as we can see from the numbers, there's a strong moat around Alibaba. If we want to quickly assess the management's capability of compounding money at high rates of return, we can take a look at the return on invested capital, and we can see that the compounded growth rates for 3 years, 5 years, 7 years, and 10 years are also between 10 to 15+%. Long-term debt is at $17 billion, but the company has cash and cash equivalents of $47 billion, netting a $30 billion cash position if they would pay the long-term debt. But in the current environment, it would make no sense to do such thing. The current ratio of Alibaba, meaning the current assets divided by current liabilities, is 2, which it proves that it can definitely pay its short-term obligations. And also, based on my math, right now Alibaba is trading at a discount of about 25 to 40%. This would make Alibaba a very attractive investment, and I'm telling you all those things, all those numbers, to let you know that Alibaba is a great company. However, coming back to the investigation, the CCP power and unpredictable behavior is why many of the Chinese companies are kind of all trading at a discount to the American counterparts. Let's move on to part 3 and talk about my plan. These kind of events are giving us investors the possibility to buy $10 bills for $5. My plan is to continue to look how the investigation is going to unfold, what measures the CCP party is going to take on Alibaba and the Ant Group, and then proceed from there. This is just the beginning of the investigation, and well, I want to see what kind of measures they are planning to take or they will take on Alibaba and the Ant Group. Keep in mind that the risks are a little bit elevated due to the degree of control and unpredictable behavior of the CCP party. However, I do not think that they will crush their star businesses. I mean, it would make no sense for them to shoot themselves in the foot. Alibaba and the Ant Group are huge players in the Chinese market, and the Ant Group served like 70% of the population, of the young population, through Alipay and the various lending and borrowing mechanisms that are deployed through the apps and through the technology that it developed. In any case, they will probably pressure Jack Ma a little bit more, and they might slap Alibaba and the Ant Group with a multi-billion-dollar fine and leave it there. They might also take some serious measures of breaking down the companies, but for now it doesn't look like something like this would happen, but we never know, and this is the risk with the amount of information that we have at this point. This back and forth bear poking between Jack Ma and the CCP will probably send the shares tumbling down some more before they get back to like $250, but I would be totally wrong. So for now, I'll just wait and read more about the investigation and wait for some other information to pop out to assess the risks and to see how this is going to affect the price of the shares. As a final thing, I highly recommend that you do some additional research regarding the variable interest entity to know the risks that are involved with investing in a Chinese company. If you already have some Chinese companies in your portfolio, then it might be a great idea to go and crack open their 10K and read about that in the annual report. Alright everyone, I want to thank you so much for watching this video. I hope you enjoyed it and you found it useful. If you did so, all I ask you is to please smash the like button for the YouTube algorithm. Feel free to subscribe if you want to see more videos like this one. And until next time, take care, have a wonderful day, and don't forget that you are amazing.